This is an execution video for January the 7th, 2011. Here on the left hand side you can see all the stocks that have been gathered. They all have earnings or some sort of catalyst in them. And then you go in and you click the net, and that sorts based on the net change. And you can see which stocks are gapping, which stocks are not, or which stocks are opening without any significant gaps. From here, this is how you differentiate. I'm pulling all the stocks that I feel have good ranges and are on critical points on the daily chart. IHS was at the 52-week high. Stocks in the sky. There's a potential for a couple of scenarios to play out. Stock could either have a massive breakout or the news was not positive enough and caused the stock to undergo a pretty good price adjustment to the downside, or in other words, a correction. TXI, good 2-point mover on earnings. GBX can move pretty good. RDEN didn't really trade that before. I mean, it's a NASDAQ stock. I'm more prone to trading New York only. That's where I started my trading, so wasn't sure how this one was going to play out. Shaw is gapping down 1 point. I'm going to walk you through this IHS. Let's move right to it. Waiting for it to open. There's GBX flashing blue, telling me it's at the high of the day. I went ahead and took some GBX long. And you see all the stocks that are opening are within our 50 cent parameter. Not much price adjustment built in, so there should be some action in this stock. And then it's just going to come down to your skills to deal with the intraday volatility. Right, so there's the opening on IHS. As you see, there's the spread. It's pretty common. It would try to narrow. You have the 80 opening price as your opening price pivot. And the stock is going to try to trade away from that 80. Either +1 on the day or -1 on the day. But as you're seeing the openness, the stock is slightly opening down. Market, it's opening flat pretty much. So there's a slight bias to the downside on the news. Now, if the market was gapping down 50 points, futures down 10 or whatever, then you can assume that the stock is gapping down with the broader market. But here, given the market open neutral, you're clearly seeing that the news caused a negative bias in the stock, and not the broader market. So this is kind of give you maybe a bias to the downside, and you can prepare yourself to anticipate a short trade in the stock. Printing 80, the bid is narrowing towards the ask. Again, if the stock continues to go higher, you'll start to see the 80.49 get hit. Offer steps up to the 50, maybe even 55, or maybe in the mid 50s, given that this is a pretty thin stock. Or you'll start to see the bid get hit. One of those two things are going to happen. Print still 7. You're seeing the offer step down from the 49 to the 35. And then of course you have those scenarios in your head, in the back of your mind, thinking this stock could either sell off aggressively or rally aggressively. given that it's at a critical point, and you're trying to figure out which one of those two scenarios are going to play out in the stock. So having pre scenarios are very important. You kind of have to understand the news. You kind of have to understand where the stock is positioned, and then formulate possible scenarios that could play out, or possible reaction scenarios that can play out given the presence of catalyst. Here is printing the 07. See what happens. If it's strong, he'll start to uptick the bid above the 07. That might limit you from getting short. And then maybe here there might be some other prints transpiring. Maybe a print in the 20s on an uptick print, but never hitting the offer. That could also give you a sense of weakness as well. So we just want to see more prints coming in, seeing whether those uptick prints are hitting the offer or not, whether downtick prints are hitting the bid or not. We want to see more data to kind of give us a better feel for which direction it's going to go. But we can't anticipate how the tape should read if it's strong. The bid should start to narrow towards the ask. If the stock is weak, you'll start to see the ask narrow towards the bid. And we just have to sit here and watch the tape and let it do its thing. And then start drawing conclusions. Here he prints the 01. Then he bids 07. Want to see the next print. Prints the 10. I went ahead and took 100 shares involvement short. This is an involvement short. It forces me to be on top of the stock. Watch the tape very closely. You're much closer to the stock if you're in it. I want to be in it. If it's gonna go against me, it will have to print the 35. The offer step up above 35, and I'll just simply get out of the situation and then see if that's a sustainable move, and then simply use my out as my new pivot area. So I need to see what happens after this. If he's strong, he'll try to narrow towards the 35. There's the bid stepping up, narrowing towards the 35 somewhat. I dragged it down here. And then he comes in, he prints the 80. And you see the offer steps down below that 35 to the 15. So we're starting to see the stock trying to shift back down here. For new traders, this could be a very difficult situation because you're seeing an 81 by 15. I think my quote are set up to see only New York only. So if you're watching level 2, you're probably seeing a much better spread here, most likely. Having your quote set up to New York only kind of slows down the tape. It won't be flickering so fast, and they're not that much off of the ECNs. So he's printing the 80, so we can reference the 80 here. If it's weak, he'll offer the 80. If he's strong, he'll come back and bid the 80. The offer at the 15 will just hold there, will just stay there. It won't continue to show any more weakness, and you start to see the bid step up to the 80. If the stock is weak, what happens is that the bid will stay at the 81, and then the offer can start to step down towards the 80. And what you will see is that it's a struggle between really just the sellers battling it out, trying to get out of the stock. That's what you'll see here on the tape. Prints 99. Let's reference to 99. We're still kind of referencing the 80. We're watching for some sort of narrowing effect, right, to give us cue of strength or weakness or sustained weakness. It's definitely weak here. It's coming back below. It's printing below the open. Now it's printing the 87. We want to see the offer step down and definitely the bid step below the 87. There it is. Print 73. Let's reference to 73. I'm just selling 100 shares, shorting some more here. Very hard to take size on such a thin stock. Here we're seeing the stock trying to bounce, right? It's printing 58, bidding 61. Usually stocks that shows bullish signs like this, if the macro trend is down or weak, you'll see these micro bullish tape patterns, very short-lived. All uptick bids gets taken out immediately. Any sharp bounces in the stock will be met with offers on a minus. So the stock could be bouncing here, and if it's weak, what happens is that it will bounce, it rip up, and then you'll start to see the offer on a minus coming right in, and then that could signal a lower high. And then you have another point to work with. That point would be where the offer on a minus came in off the bounce. And this, if the stock is putting in a lower high, it should never violate that point. It's printing the 58, bidding 63 now. It's trying to shift back up a little bit. You can see why stock ripped down very quickly. Now it's just trying to bounce. It doesn't necessarily mean it's a bounce to go higher or reverse. It's just really a bounce to maybe to go lower, actually, if the macro trend is down. It's just what it's trying to do here. Prints to 58. Bidding 66. If it's weak, he'll start to hit the 66. It's an opportunity to for sellers to come in and sell at a slightly higher price if there are more sellers than buyers. Bid continues to step up to 67 now. Gets hit. Again, you can also maybe look for the narrowing effect here. If you start to see the offer step down to 80, maybe in the high 70s, looks like it's trying to shift back down to the downside. That can also maybe give you a cue to maybe add here at the 67. As you're starting to see the weakness on the tape, the leading weakness on the tape, that tells you that the stock is trying to shift back down. We're tape readers. There has to be an edge in the tape, and that edge is about how the bid and ask updates. Right? If you're reading the tape poorly, what you're thinking is the stock has to hit 50 before you short, and you might as well use a chart for that. Here as a tape reader with level 1, you should be able to see offers on a minus, offers narrowing, and that gives you a leading indication of weakness, not after it violates a certain point. Okay, you want to have an edge by seeing leading patterns in a tape. And many times a leading break of the 67 would mean the offer stepping down to the 70s, so forth, from the 87. So it's ripping up here a little bit, bits the 76 for a second. As you can see, immediately it was met with the seller. It bit the 76 for a second. Immediately there was a seller right there for it. Now let's reference the 76. If the stock is trying to hold here, it will come back and rebid the 76. If it's trying to continue to go a little bit higher, it will come in and start to rebid the 76. If it's trying to continue to go down, again the 49 would stay put, or it might step up a little bit, but it won't definitely step up all the way back to the 76. You will start to see the offer step down and be at the 76. As you see, I'm picking my spots to get short. Now it's offering below the 76. Right, you're seeing trades go off at the 76 earlier, and now you're seeing the ability to buy stock at a cheaper price. That should condition you to feel that the stock is weak. On top of having the catalyst to back up that pattern. Press 53. Waiting for the next print. Stops the bid up. So the stock is trying to pause a little bit here. It's definitely trying to hold a little bit after the rip down. It's trying to hold because you're seeing the bid come right back over the top of the 53 to the 60s. It doesn't necessarily mean it's going to go higher. We just have to let the stock trade some more. Let's see if it ever hits the 80. Let's see if it ever hits the 80 and then step the offer up above the 80 into the 90s. Then coming in and maybe bid the 80s. Let's see if that ever happens. And you kind of have to be comfortable with that. Printing 64 here. He's back offering below that 76. So it's a good sign. Comes back bidding above the 62 here at 66. It's trying to hold a pause here. Print 73. Print 72. See if it ever bits to 72. Print 75. Again, you're seeing all these uptick prints not hitting the higher offer, and then he comes in and does this. Bits the 80. And this could definitely shake some weak hands out here. Those that are short and they're seeing the bullish pattern coming into the tape. So really nothing else you can do here except, okay, if you decide to get out at the 91, so you go market, you get filled at the 91, that becomes your new pivot. An offer below the 91 requires you to get right back in short. And if it comes in and starts bidding the 91, you have to continue to unwind. Or if you went market to cover because of this and you get a price improvement, that's not a very bullish sign for the stock. So that might prevent you from unwinding some more until the stock bids where you got filled. So in other words, if you come in and you go market and you get a price improvement of say 89, that's not a bullish sign in a tape. You should be getting price improvements if the stock is strong. Okay. If the stock is strong, there are not a lot of sellers in stock. Your market order should be hitting the offer. So if you go market and you get filled at 89, then 89, you notice that 89 is a price improvement. You stop unwinding until you start to see a bit of 89. If you go market and you get filled at the 91, all of a sudden you notice the stock offers down to 85, you might have to get right back in at the 80. And then use 85 bid, an 85 bid as a re-unwinding process. You go back and start unwinding the short trade again. See what happens here. We want to see the next print. It's important to see the next print. He prints the 85. As you see, he continues to print and not hitting the offer. All these uptick prints are essentially classified as buy orders. And this is where buyers are really getting filled. They're getting filled to 85. They're getting price improvements. And you can kind of anticipate that the offer will step down to the 85. Because that's really where the sellers are. If you go back to the literature where it explains how to classify all uptick prints as buy orders and how all downtick prints are classified as sell orders, kind of give you a sense of feel of where buyers and sellers are getting filled. So again, if he continues to be strong here, he feels like it's strong, but if it continues to be strong, he'll have to bid the 85. And that might be the straw that forces you to cover. Okay, and if he can't bid the 85, the offer will step down to 85. Seeing the offer step down. You see the offer stepping down from the 80 down to 90. The stock is having problems here. You know, if people really are wanting to buy the stock, we should have seen it hit the 90s. We should have seen it hit the figure. We should have seen it maybe a bit in the 80 at the 85. Should have seen all that by now. But the stock is having problems going up, as you can see. Waiting for the next print. No one's hitting the 93, right? The offer steps down to the 88. You can sense that this 80 is going to get hit because there's just no takers at the 93, no takers at the 90. We're at an 8-cent spread here. You're starting to see the potential shift down here to right back down. Then 85 might be the lower high, seems like. There it goes. And I went ahead and add another 100 there. Missed that 80 so fast. Putting in the teens now. Again, as the spread is wide here, 16 by 43, you should be starting to look at the narrowing effect. Again, more weakness means more offers stepping down, narrowing towards the bid. Stock's trying to shift up, the bid will start to step up as well. But you want to see the ask step down aggressively, narrowing towards the 16. There's the offer stepping down. Prints 21. We saw a 21 print. Let's reference the 21. There's the offer below the 21. You can see there. You see the battle between sellers. Right, they're trying to get out, and they're battling each other for the out. That's why you're seeing offers below the last print. You see the weakness here. Prints 11 offering below it substantially. Prints 92. Prints 91. Offers below. Print 75. Offers below the 75. Again, no buyers, just sellers. And then they're offering stock at a lower price, and they're competing amongst each other. I'm already bidding out here. Some at the 50s. You want to have bids out. You know, when the stock rips down like this, you want to have bids out. Like for example, you should have bids out maybe at 78.10. Just have them out there. If you don't have them out, you might not be able to get the price, because it could just print one time there, print 200-300 shares there. And if you don't have your bid out, you'll miss that. And if that happens with the bottom, you're going to be in that, and it's going to try to bounce off of that 10. Then you're going to be part of the fuel to cause it to go higher off the bounce. So you want to, if you want to get good prices here, you got to bid out on the momentum down, on the acceleration down. You don't want to be a person that waits for the bounce to come and then start to cover. You want to bid out on the stock when you're short. Right, and that's the trade on IHS. Definitely the stock had more. I think it was down like $4. To me, it's very risky. It's very difficult to know if it can move down $4 or not. Very difficult to discern. This is why I didn't really short it. Usually the likely scenario is that you would go in, you would short it, and then you would just use your out as your new pivot, and you treat the trade as a new trade. If it has more, it should trade significantly away from your new trade. And you just work it as if you worked it back up at the open area. So I should have re-entered here and just simply manage it, or maybe I would look for the bounce and then add on the shift. I'm sorry, be patient and wait for the bounce and then look for a second leg down. Once the bounce is done and you start to see the bearish patterns coming to the tape, then start shorting the stock there. Because it's very dangerous to be shorting here. Now the stock went down almost 3 points straight down. There's going to have to be a bounce somewhere here, and you just have to be patient and let it happen. And if there's not one, then so be it. Let it go. It's too dangerous. But that's the execution video for January the 7th, 2011. I didn't really trade much more here after this, as you see here. Not much going on here.